Hello everybody and welcome back to another episode of Adam Bergman's Money Makers, where we talk everything finance and as it relates to your own personal finance journey and financial independence. Now I understand that might sound cliche and that might sound absolutely moronic because everything is red. Everything sucks. But I wanted to go over today's CPI data report. I wanted to give you some silver lining, some positive news in a really bad situation. And I wanted to explain to you that wealth and riches are never built at the top. Wealth and riches is built at the bottom and clawing your way up to the top. Because if you start buying over here when everything's all gravy, where everything is great, you only have one place to go, down. But if you're buying on the way down, eventually a bear market becomes a bull market. I want to show you this chart really fast. This is a chart from 1926 and it goes all the way up to around 2020. The bear markets versus the bull markets. If you take a quick look at all of the blues, this is going to be the bull markets, and everything in red is obviously the bear markets. You can see the difference between the length of a bear market and a bull market. First bull market, 3.7 years, followed by 2.8 years of a bear market. After 2.8 years, you get 13.9 years of a bull market. 6 months of a bear market, followed by 15 years of a bull market. 6 months, bear market, followed by 6.4 years of a bull market. 1.6 years, bear market, 2.5 years, bull market. 1.8 years, bear market, 12.9 years, bull market. 3 months, bear market, 12.8 years, bull market. 2.1 years, bear market, 5 years, bull market. 1.3 years, bull market, 8.1 years, bear market. Except for one of these, a bull market is at least double the span of a bear market. Now you're gonna say, Adam, but these peaks right here, these 4 big peaks all look the same. So what am I really gaining? Well, if you bought at the peak and then it dropped, well, then you're just gonna recover. But if you bought at the peak and as it's dropping, you take advantage of something we call DCAing the dip, dollar cost averaging the dip. Well, then your cost basis is no longer at that 52-week high. Your cost basis drops, and then when you get another peak, another bull run, you're making profits. You're making money. You never know when is the next bull run. You honestly don't know. Look at the dates. Almost 3 years, 6 months, 1.6 years, 1.8, 3 months, 2 years, 1 year. Where are we now? I think that our bear market started at the end of December, early January. So let's say we have January, February, March, April, and now we're in May. So we had 4 to 5 months of a bear market. The thing is, we have a super accelerated bear market right now. My own personal opinion. The super accelerated bear market also leads to a super accelerated bull market. And the span of a bear market can get shortened because it's so aggressive as what we're seeing now. How so? NASDAQ, worst quarter ever. S&P, second worst quarter ever. It's bad out there. And now we came out with the CPI data. CPI data came out at 8.3%. We were expecting 8.1%. However, this is actually a 2% reduction from last month of 8.5% if you're going year over year basis. The adjusted inflation for this quarter was only 0.2. This is the actual CPI report. I highly suggest that you download this report from the Bureau of Labor and Statistics and read the report yourself. You should always challenge yourself to learn something. Earlier today, I did a live and somebody said, Adam, how did you learn about crypto? How did you learn about this? I'm a geek. I read a lot. That's it. Just read a lot and do your own research, 100%. None of this is financial advice. Everything is purely entertainment and educational purposes only. Look at the numbers. Total was 8.3, right, for all items. October, 0.9. December drops. Then January drops a little bit more. All of a sudden in February it goes up, and then in March it rallies like this, crazy up, right? And there was so much fear that this is going to go up through here. But no, it came down 0.3. Is it possible that 8.5% was the top of the inflation curve? Is it possible? Is it possible that we're peaking and we're about to have an inflection point? So think about this. An absolutely accelerated bear market, possibly shortened by a peak of inflation fears. What's going to happen? There's going to be another report and another report. I believe we need at least 2 more reports showing that inflation is going down. Now, it's not going down as much as we wanted it to, but it's possible we reach that inflection point of 8.5%. And as long as we're going to go down from 8.5 to 8.3, maybe 8%, and then after that, maybe 7.8% or something like this, it's going to look good. What's going to happen? The next meeting, the Fed is going to raise 50 basis points. The meeting after that, 50 basis points. So at the very least, we're going to have 2 more meetings of 50 basis points, probably 3. But on the 4th and 5th meeting, it can possibly stop. Where am I going with this? It's possible that this bear market is going to stop this year. I'm truly hoping that we have another 4 or 5 months, maybe 6 months of a bear market. I'm hoping we don't have any more months, let me rephrase. But I'm hoping it doesn't last longer than that, especially because I have a lot of call options for Palantir in 2023. I hope that it doesn't last for much longer than that, and I hope that we're able to crawl out of this and we start getting a bull market. Now, if we had a bear market for 1 year, we should see a bull market for at least 2 or 3 years, maybe more. Supply chain issues, bottlenecking. Eventually, supply chain issues are going to go away. Eventually, bottlenecking is going to go away. Eventually, all this labor shortages of people that started their own business, that wanted to work from home, are going back to the labor force. They have to. They're not making it from work at home. When that happens, there's going to be an increased number of laborers for the labor shortage. When there's going to be an increased number of laborers for a labor shortage, we can start paying less fees. When we pay less fees, the producers, the businesses can start charging less fees for goods and services. Now, it's never going to go back to pre-pandemic prices, but it can slow down a little bit so we can breathe, because we're just congested right now. We can't find a footing. War with Russia. Yes, even though we're not in the war, we all know that we are kind of doing a proxy war through Ukraine, and Russia's warring with us through Ukraine as well. This is definitely hurting our energy sector, but that's going to go away eventually. I gave it some thoughts. So I said that a lot of people used their stimulus money for stupid shit, and that's those $1,400 checks. But then I realized a lot of people got loans, big loans, stimulus, huge loans, hundreds of thousands of dollars, and they used it for stupid shit too. And they used it for bigger stupid shit, like cars, houses, watches, which all inflated the prices. Because if you all of a sudden have $100,000 and something costs 20 grand, but somebody wants to charge you 30 grand because they can't, it's not accessible, you can't just get it easily, you'll spend the 30, because the 30,000 means nothing for you because you borrowed the money. It's not coming out of your pocket. It's not hard-earned money. That's stopping right now. I also think the real estate going to go down. Remember, for every 1% that real estate rises, there's going to be a reduction in price or value of that property, 5 to 10%. However, it takes 18 to 36 months to catch up, a year and a half, 2 or 3 years. Prices are going to start dropping right now, as mortgage rates already went up. I believe mortgage rates right now for 30-year mortgages over 5%. They were like at 2.5%, 3%, just like a month ago. I think things will reach an inflection point, and I think things are starting to reach an inflection point. Plus, stocks are getting absolutely battered. It's not like they just get demolished recently. They've been demolished for the last 4 or 5 months. And don't forget, we're talking about the entire market at the end of December. But in November, early December, people were already getting creamed. Markets were already starting to slow down. I remember November started to slow down. I thought December was going to peak and there was going to be a correction, and we keep going. That correction was actually a recession, and that correction was a bear market or a bear cycle. Nobody knows what's going to happen in the future, guys. And all I'm saying is I'm buying. Today I bought 100 shares of Unity. Unity is down 35%. Their report was not terrible. It was bad, but it was not terrible. And Unity used to be a $200-something stock. Right now it's trading at like $30. I think it's super undervalued. Now, I held a position in it before. Unity is like the AWS of gaming. They make like interactive gaming, interactive 3D modeling, and think about metaverse, right? The future of metaverse. Super undervalued. Palantir I bought guys, it's just undervalued. Everything's undervalued. Now, none of this financial advice. Definitely do your own research, and you guys should definitely understand what's going on with the economy, what's going on with the market. And to better understand, I want you to click on this video right here. This video is going to explain the wage spiral, and the wage spiral explains the correlation between inflation, employees, employers, and how all of this turns into a recession. Definitely click the link over here so that you guys can understand what's going on. Thank you very much and have a great day.